Hello and welcome to the market update video with me, Dave Madden. Stock markets in the US and Europe are down across the board due to an increase in bond yields. The US 10-year yield has increased to 2.97% as there is fear the Federal Reserve might look to do another large interest rate hike next month, and in turn we're seeing a sharp move to the downside in US index futures. Here in Europe, stock markets are largely lower following the PPI reading from Germany. It came in at 37.2%, a new all-time high, and inflationary fears are pushing up bond yields in Europe, and as a result we've seen declines in most European stock markets. The US dollar is higher once again. Yesterday, Daly of the Federal Reserve stated that the war on inflation is not over, and traders took that as a sign we could see another large rate hike from the Federal Reserve at the September meeting. We've seen a decent move to the upside in the US dollar. In fact, the US dollar index has hit a 1-month high, and conversely, we've seen 1-month lows in euro dollar and also in pound dollar. The British pound is largely lower across the board, despite the fact that UK retail sales in July increased by 0.3%, beating the estimate of negative growth of 0.2%. Oil is down after 2 consecutive days of gains, as it seems that the broad bearish sentiment in markets across the board is weighing on the energy.
Euro dollar has been trending lower recently due to a sharp upward move seen in the US dollar. Yesterday, Daly of the Federal Reserve issued some hawkish commentary, which has sent the US dollar higher for the past 2 sessions. Also, we've seen an increase in US government bond yields, and that's also pushing up the US dollar, and in turn we're seeing weakness in the euro dollar. Euro dollar has fallen to its lowest level since mid-July, which really highlights how bearish the recent downward trend has been. Looking at the MACD indicator, we can see that momentum is in negative territory, implying the bears are in control. While the currency pair continues to hold below these 3 simple moving averages, it's likely the more medium-term downward trend will continue. Further losses from here could see a target at 0 spot at 99.90, and a break below that could see a target at 0 spot at 99.51. If you take a look at the RSI, we can see it's moved lower. In fact, it's moved into oversold territory. This could be an early warning sign that the recent downward move in price has become overstretched. If we do see a snapback in euro dollar from here, it might target this simple moving average here, which comes into play at 1 spot 0129, and a break beyond that could see a target at 1 spot 0202.
Taking a look at gold, the sharp rise in the US dollar and the increase in bond yields is weighing on the yellow metal.